Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well on this fine Friday, weekend, weekday, or whenever that you are watching this video. And if you're new here, every single Friday I break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee, hence the name Crypto Over Coffee. In today's episode, we have a ton of Bitcoin price talk and Bitcoin news, a huge Algorand announcement, Cardano updates, and of course our usual 404 Logic Not Found segment. But before we get into all of that, let's kick it off with questions from the community on YouTube and Twitter. So I'll head over, not to my iPad today, but over to my computer, which I've got right here, to check out those questions. Now, if you want one of your questions answered, leave them in the comments below or tweet me at Hashoshi4. And if you would be so inclined, please do subscribe to the channel and hit that little bell notification button down there so you can get a heads up whenever I post new content and you can get your questions answered every single week. Awesome, so let's dive into these questions. Got the first one here. Let's see. All right, Ryan M3 asks, as an ETH developer, you just listed several reasons why ETH 2.0 will struggle, even when it does launch. If you already see issues with it now, I'm sure they're aware of them too, but do you see this as a concern for ETH? So Ethereum 2.0 has been a long time coming, and there's no doubt about that. There's no question that this is something that people really want to happen, and it likely still won't be in at least its full form until 1.5, 2 years from now. That's just my pulse. I think that's what it's going to be. Now, there are some issues with the timeline, but that being said, I think what they're working on can't be understated. This challenge, and the challenge that I speak about, is creating a secure, sharded proof-of-stake network is not easy. It's not an easy job, and I think ultimately what's going to really make the difference is what the other networks in the world are doing. Cardano, Algorand, Tezos, Zilliqa, etc. I think all these networks are going to put pressure on Ethereum to do more. But what Ethereum has that these networks don't have is a large developer community and a lot of products that rely on Ethereum now. So I don't think Ethereum is screwed by any stretch, but I do think they're going to have to start pressing on timelines, getting things out to the public, and we'll know more probably in July when the first phase or phase 0 of Ethereum 2.0 comes into the mix, what to expect going forward. So I still believe in ETH. I don't think it's mutually exclusive, and I think that Ethereum and all the projects that I listed before can all survive harmoniously, in fact. So I don't think it's a zero-sum game in that regard. All right. Hans Illige asks, today all smart home devices could directly access the internet, so they can freely spy on anyone's home and launch DDoS attacks, denial of service attacks. How obvious could that be? Everyone in the IoT market decided to look the other way, and that's why I say it's a stupid world after all. This is very true. One of the worst security things you can do for your internet security within your house is to use IoT devices, especially IoT devices from not so reputable companies. So if you buy that cheap video doorbell online on Amazon, I see it all the time, it's definitely not going to be the most secure thing, and expect every single video recorded on that to be viewed by someone else, to be quite honest with you. Secondly, smart home devices are often built on hardware that is just not secure, period. The means of communication just aren't secure yet for IoT devices. So when you get that smart toaster, you get that smart oven, smart everything, just be mindful that these devices are not as secure as they possibly can be. So yes, I agree. It should be more obvious, and there should be things done to fix that. I actually do think blockchain and the technology behind it as a networking concept can really be applied to these edge clients or this weaker hardware that's interconnected directly device to device. Making IoT devices peer-to-peer connection over a blockchain network might have some data security implications that could be beneficial. So we shall see. Thank you for your question, Hans. All right. Cavalier Liberty asks, how about Coinbase selling out to the government? Yeah, I mean, my first response is, are we really surprised? I mean, Coinbase is a regulated entity, and as all exchanges should be, because ultimately the real issue is that if you are an exchange with a centralized company behind it that makes money, you have to be regulated or you will get destroyed. And so, quite frankly, DEXs survive because there's really no one to go after, per se. Ultimately, though, I think Coinbase is going a little too far in trying to be the go-to resource for the government in terms of helping with this. The reality is, though, is that if you're not doing the right thing and not reporting your crypto on taxes, but you've been buying it on Coinbase or any US exchange, to be quite honest with you, they're gonna come after you no matter what. And that's really what this is about. It's going after the money laundering jobs. It's going after the tax evaders. Those are really the reasons why this is happening. But ultimately, it's not a good look. It's not good that Coinbase is just straight up bold-faced passing along information. But ultimately, we can't be surprised. These are centralized exchanges that are regulated by the US government. And the same thing applies in Europe and other governments as well. So this isn't something that's unique just to the US and just to Coinbase. So let's be honest there. But yeah, I don't love the idea, but I am not surprised at all. All right, this is a long one, so I'm just going to read sort of the bits and pieces. You talked about basic attention token not being a token that's designed to accrue in value, and that was on my video with Altcoin Daily. Same thing applies to Link and Chainlink. If it shot up to $100, you can't really break it up into smaller units. So that's the thing there. I never said that you can't break it into Link into smaller increments or into smaller pieces. If I did, I misspoke. My apologies. What I really meant is that if Chainlink individual Link tokens are worth $100 US per Link, the valuation of Link itself would become almost a barrier to entry for people trying to use Chainlink. And yes, you can use fractions of Chainlink and Link. The reality, though, is that when someone sees, oh, Ether is $230 US, and you're a new person who doesn't understand crypto and doesn't understand that can be fractioned and that you can use a portion of ETH to pay for dApps, you're going to be like, no thanks, it's too expensive. And so my fear is that while they're trying to garner adoption, while they're trying to build up the user base, normal users especially, ultimately you're going to need to keep that barrier to entry low. And as that token price starts to outstrip the amount of actual usage behind it, that's my main concern. And with basic attention token, the same thing really applies. Just because it's used does not mean it's supposed to accrue in value, or that's what it was intended to do. A utility token doesn't necessarily imply that a utility token, the more it's used, the more it's worth. It doesn't always work that way. So just something to bear in mind. I'm no oracle, pun intended, or seer. I don't know exactly what's going to happen, but you always have to consider the fact that tokens don't always reflect their actual valuation or what they're used for in terms of utility. Thank you for your question, Mark Thomas. Big Herbs, just about to order a Nano X. So since ADA is not natively supported on Ledger Live, but instead on Yoroi and ADA Lite, do you download these third-party wallets onto your Nano X? Okay, so this question is basically about how to get ADA onto your Nano X hardware wallet. There are two options. Yoroi is my favorite way to do this. On their mobile app, they just now recently integrated the ability to connect to your Nano X via Bluetooth natively the way that it does on Ledger Live on your mobile. You can do that. There are instructions online. Basically, you open up the app on Yoroi on your device. You'll have connection options, and you can pick your Nano X over Bluetooth. If that doesn't work for you, or you don't want to use Bluetooth, which I don't blame you, that's totally fine, you can use the Yoroi Chrome extension the same way. You connect your Nano X via USB to your computer, you open up the extension, you connect to that device the same way there. If you have any issues, let me know in the comments below, but those are the two best ways to do it, both on mobile and on desktop. Yoroi is my favorite. Thank you for your question. So let's go to NPC number 1337. Do you have the keys using Cash App? This question basically means, do you own your own keys if you're using Cash App to buy Bitcoin? And the answer is no. The reason why I love Cash App, though, even though it does have fees and sometimes the spread is not so great, the fees are better than Coinbase, but also because you have instantaneous ability to withdraw to your hardware wallet, which you should always be doing. At the very least, when you're on Cash App, make your purchase, immediately get in the habit of moving it to either your own self-custody wallet, that could be a software wallet if you want, or move it straight to your hardware wallet. It's the best way of doing it. You don't own your keys on Cash App, so don't let anyone tell you otherwise. Thank you for your question. And I think this is the last one. Austin Thresher Music. Hey, what do you know about NIST researching forking Bitcoin or ETH for the digital dollar? I don't know a lot of specifics here, but I know that that is probably the smart way of going about it. If you want to build a decentralized network that works, you probably are going to go after Bitcoin and Ethereum and look at the code base and see how you can improve it. What they're probably going to find, however, is that natively these networks are not scalable enough to garner and render the benefits that they're looking for at the scale that a digital US dollar would need. Ultimately, we're probably going to end up with a solution that's less so a blockchain, more so a distributed ledger. There is a difference. A blockchain is one canonical chain. A distributed ledger is just a shared record that could be split up into many pieces and agreed upon against even smaller groups that all kind of agree on state on a certain cadence, right? Ultimately, there's a big difference, and the scalability numbers I don't think are there yet, regardless of what protocol you choose, to run the entire US economy, digital dollar on them, quite frankly. So I'm sure NIST is doing research, as they probably should. They are probably one of the more impressive technical agencies, I guess, within the US government. So I hope that they find what they're looking for and that they can determine. Probably they're going to have to wait for this to happen. I don't think the world is ready for this anyway. So thank you for your question. Hopefully that answers it. I don't know a lot about it, but I'm just sort of postulating, if you will. So thank you very much for your questions. Let's move on to the news. And finally, there's some good news from the US government about crypto, and that is the Advancing Blockchain Act proposed by Kentucky Representative Brett Guthrie. One second. This act includes provisions to commission deep research and analysis into blockchain technology and its applications. This includes how the US government can support innovation in the space and also how the US can stand as a leader in the development of this technology. Right now, the US is no doubt lagging far behind to countries like China and cities like Dubai, who've invested heavily in blockchain technology already. Now, in order to remain competitive, the US has to make these types of moves to establish clear regulatory policy that clears roadblocks for innovators here in the US and also invest dollars into the development of blockchain technology. Hopefully, this act could be the first of many pieces of legislation, plural, that are friendly towards this burgeoning industry. Now, as promised, I've got some interesting Bitcoin stuff to talk about today, and the first story is one about some huge whale activity on June 11th. Using 3 separate transactions, an unknown entity moved over $1 billion, that's a billion with a B, worth of Bitcoin on the network, which set off alarms on the internet, of course. Now, this comes in tandem with yet another rejection of Bitcoin's price at the $10,000 mark, and people may wonder, is $1 billion Bitcoin whale about to drop all of their Bitcoin on the market? And the answer is, we don't know. And this is not the first time this has happened this year even, with a transaction of over $1 billion worth of Bitcoin also coming out of Bitfinex in April, already in 2020. Now, I personally don't think this is means for panic, but I also want people to remain vigilant and aware that Bitcoin is equally as likely to drop down to lower prices as it is to continue upward in trajectory. Please exercise caution and good risk management practices out there. Above all, cool heads will win. The bigger threat to Bitcoin, though, is the ever-present success of scammers online taking Bitcoin from unsuspecting individuals. But this also draws undue scrutiny towards Bitcoin in a negative way in the media and from the celebrities that are being impersonated. Recently, hackers have stolen hundreds of thousands of dollars, if not millions, of Bitcoins using fake live stream giveaways on social platforms, especially on YouTube. The most successful scam recently was one pretending to be SpaceX and Elon Musk giving away Bitcoin. All you have to do is send your Bitcoin to an address first, and then we'll double it and send it back to you. Well, these types of scams have caused YouTube to wrongfully ban legit creators from the platform, and no solution has been found to stopping these scam streams. So the longer that this goes on, the worse things get for Bitcoin in terms of optics, and obviously in terms of user sentiment. Now, my advice to you, never give Bitcoin to anyone, period. And secondly, if you're on a stream and you see Elon Musk or some other notable person saying they're giving away Bitcoin, report it because it's obviously fake. However, there is some bullish news, or at least some cool news in the Bitcoin world that I want to report on, and that is that Microsoft has been working on this mysterious digital identity solution that uses the Bitcoin blockchain. Now, I've been so curious about this ever since I heard about it at Consensus in New York last year. But the idea is that this layer 2 decentralized network with a Bitcoin underpinning can be used as a digital credential for online services across the web. I, for one, think this is cool, but of course, I'm waiting for all the conspiracy theorists to come and attack me for thinking about it in a positive way. You know, Bill Gates and all that stuff. Whatever. I'll be digging into the open source code and actually learning for myself what I think about it, but this is a really, really cool and promising thing to see being built on top of the Bitcoin network besides just Lightning. Now, the final bullish thing that I have for you on the Bitcoin map, I guess, is the simple fact that Tesla's stock, after rising above $1,000 a piece, broke above Bitcoin's total market cap. One stock broke up over the Bitcoin total market cap. Now, why is this good news? Well, there are two reasons. One, it just proves that we are so early in terms of Bitcoin and access to Bitcoin especially. So we shouldn't be stressing about prices and market cap. This stuff will come over time. Now, two, there are a lot of parallels between Tesla and Bitcoin thematically. Both are radically different models of doing a really old, established thing. Both are consistently doubted and proclaimed dead or useless, and both have an avid following that believe in it through thick and thin. It took Tesla years to get where it is today, and Bitcoin is following that same trajectory. We will get there as a community. We just have to get into a place where we're all working together instead of fighting with each other. Sounds like a kumbaya, wishful thinking thing, but I think we can do it. And I believe that wholeheartedly. But, alas, it is time. Ladies and gentlemen, it's time for 404 Logic Not Found. And for those of you who are as of yet uninitiated in this little firecracker of a segment, I basically highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. Speaking of attention, if you want to help this video get some attention from the YouTube algorithm, please do hit that like button down below on my behalf. I really appreciate it. It really does help the video. Now, today is a sad day because I have to hit a project that I really like with a 404 Logic Not Found. This past week, Brave Browser, the popular privacy-oriented browser that was caught redirecting links to popular crypto exchanges and sites with their affiliate links. Now, in essence, this basically means that when you type in Binance.com in your browser, it was auto-completing to their affiliate link. Now, this didn't expose user data or affect privacy of their users, but it was a deliberate and slimy move to make money from affiliate links without, in my opinion, properly disclosing it. Quite frankly, if the team had just simply let the user know with a visual cue or asked for a user to use their affiliate link, then it wouldn't be an issue. This would have all been avoided. However, using autocomplete and lists to push affiliate links is just not an ethical move for a browser to make. And it's extremely disappointing that this type of move was made in the first place. Now, since the news broke, Brave and Brave CEO owned up to the issue. They took responsibility and have rectified it by removing this feature from the browser. That said, it's a needless revenue generation move. I wish they just had the judgment to just not make this move in the first place. It's quite simple. You need to protect your reputation in this space. 404 Logic Not Found. Hopefully they can win back the community's trust in this regard. And I love Brave, but I recognize this mistake and I felt it my responsibility to share it with you as well because I often recommend Brave to people. For all of you Algorand fans though, I've got some awesome news for you. Oh, and make sure you're subscribed because I have a really cool video featuring Algorand coming early next week. Now, Algorand recently announced that it's working in tandem with a blockchain platform called Blockstack to create a new secure smart contract scripting language that can be used on their platform as well as others. This new language, dubbed Clarity, is yet another example of the decentralized platforms moving towards formally verified, highly secure, and predictable languages to execute smart contract logic. With the advent of DeFi, where exorbitant amounts of money are at stake, it's critical that contracts can operate at the highest level of reliability, predictability, and integrity. The highly capable team behind this new language is poised to create something really valuable that will have a significant impact on not only Blockstack and Algorand's network, but on other networks as well that might be able to benefit from using this language. So I'll be following this extremely closely. I'll be watching the repos, assuming they're all open sourced, and I have to tip my hat to both teams for creating a new solution where they believe no current solution offers what they needed already. And speaking of a solution to a problem where no current solution is adequate, a startup called Hybrix has been getting noticed lately for their cross-chain asset transfer technology that could enable a new breed of decentralized exchanges, or DEXs. Essentially, Hybrix creates a shared network layer between multiple blockchain networks with unique assets and properties in and of themselves, where the Hybrix token is then transferred as a colored coin to swap value between a multitude of blockchain networks and tokens. By colored coin, I mean a coin or token with associated metadata that sets it apart from others on a network. And this same idea was proposed as a way to add tokenization to Bitcoin in the past. Now, the one sentence explanation of Hybrix is extremely simplified in this example, but you get the idea. The powerful result of this, though, is that Hybrix technology can easily be used to create a low-code, less complex, decentralized exchange structure, or even allow users to more easily exchange assets directly peer-to-peer from one network to another without paying insane fees or hoping that their protocol of choice has integrated custom code to enable selective interoperability via atomic swaps or the like. Now, I'm a huge fan of Hybrix myself because I think their solution really does have the potential to actually make an impact for cross-chain asset transfer. I also looked at their JavaScript API for making and implementing their service within apps, and it's super simple and well documented, which of course is a huge plus for me. The easier it is for developers to get started and build things, the better. So well done. Oh, and really quickly, honorable mention for Cardano, because officially the testnet version of Shelley staking and incentives on the network is now open to the public and chugging away. So this is yet another critical step in the rollout of this game-changing protocol update. So I still think we're going to see mainnet Shelley by the end of July. That's just the truth. I really do think they're going to do it. So the haters can hate all they want, but this is yet another good step in the right direction. Now, in other news, a startup called Alchemy Notify is working on something that I think will be massive help in the adoption of decentralized applications. Now, right now, decentralized application UX, or user experience, is just not that great. Wait times are bad. There's no great ways to generate notifications. Managing user keys and accounts is a game of trade-offs. However, Alchemy Notify, as you probably can guess by their name, is trying to tackle at least one of those by enabling push notifications for dApps or decentralized applications. Now, in Ethereum, there's already a model for notifications in events. And these events basically use a publish-subscribe model to manage notifying users of events on-chain. However, this is really more of a pull notification because you have to watch the logs for these event triggers within your code. For true push notifications, Alchemy Notify has created a one-size-fits-all model for creating push notifications for on-chain events, from dApp contract execution, transaction mining and confirmations, account transaction receipts, account creation, all sorts of things. So this is a really basic thing that dApps really need to keep users engaged and to close the gap between the new Web3 style applications and the traditional apps that we use every day. UX is a huge thing, and I think people underestimate it. So I think this is really cool. Hopefully more dApp developers start using this and integrate it into their platform. There's not a whole lot out there for me to see in terms of documentation, developer stuff yet, but I will definitely keep my eyes peeled for that. Now, if you are particularly interested in altcoins and altcoin picks, well, I have a really cool series of videos talking about my favorite altcoin picks for 2020, which I will link up here on the screen for you to watch if you have time to stick around. But if not, you got to head out, no problem. Thank you very much for watching in advance. And until next time, have a great weekend. Cheers.